Let's get straight to it, and I want to talk about your story founding the company. But for any, I have to play the voice of the audience sometimes, and just to ask maybe the obvious question, tell us about remittances.
Yeah.
There's a lot of words in fintech, right? Payments, transfers, remittances. Like what is that focus area for Remitly? Like what makes, and just for any super novices in the room, like what's the difference between a remittance, a payment, a transfer, all these other things?
Yeah, it's a good question. Remittances are traditionally defined as folks who are sending money from largely what the World Bank defines as middle or high income countries to low and middle income countries. But they're increasingly, a cross-border payment is a cross-border payment. And so while some of our largest markets are folks sending money from the US, Europe, Australia, et cetera, to Mexico, India, Philippines, we operate now in 170 countries, and we're making international payments. By digitizing it, we're significantly bringing down the cost and making that process much easier, which is super important given the criticality of remittances.
Totally. Well, and it's amazing to see the impact that you all have had in all of those 170 countries. But take us back, like, why did you start Remitly? Like, how did you come upon this, market opportunity?
Yeah, I come from a family of entrepreneurs, so I always knew I wanted to start a business. I started a nonprofit before I started Remitly, and I was looking for a problem that would really make a positive impact in the world. And I took the road less traveled to do that. So I've traveled to close to 100 countries. I lived and worked on 3 continents. And most poignantly, when I was living in Nairobi, Kenya, I saw a lot of my Kenyan friends who received remittances. There was a poignant moment of one of my friends with her sister's Bank of America debit card going to an ATM, and the way she got money is she had her sister's Bank of America debit card. And the contrast between that and M-Pesa, which kind of you were hearing about Pix, but M-Pesa is a mobile wallet in Kenya that was transforming domestic financial services, and seeing the experience a lot of my friends with remittances, I was like, there has to be a better way. And that started the journey about 14 years ago now to build Remitly.
Amazing. During that journey, 14 years is obviously is a founder story for you. Obviously, lots of up and downs building a company for that long. Was there a light bulb moment or a real product market fit moment in those early years where you feel like you really knew you were onto something building Remitly?
Yeah. I would say at the beginning, some of the light bulb moments of the problem, and I'm a big fan, by the way, of falling in love with a problem that an entrepreneur wants to solve, and then being flexible on the solution. So the problem was clear as day, being in Kenya, and then looking at some of the World Bank data, you see that remittances are like multiples larger than things like foreign aid, and historically, 6 to 8% has been taken in fees. So the problem was always clear. The solution, there were some pivots. In the early days, because of some of the things we've talked about today, it is hard to build an international remittance, an international payments company. And so we said first, hey, why don't we kind of think about how to build like a search engine for remittances and not do the actual money transmission because of all the complexity. That business model didn't work. So the aha moment was once we actually did pivot to being the money transmitter, and this is all within the first 6 months of the business. We started just with the US to the Philippines, and we started ramping up some marketing on some channels like TFC, the Filipino channel, which you can subscribe to in the US. And we just really started to see not only new customers come in, but the repeat usage continue, and we knew we were onto something.
Amazing. What made you start in the Philippines? Like, why did that market stand out above all others?
Yeah. Now we have a whole expansion team that
totally.
Has a whole
you've got so many markets too.
I probably have this old spreadsheet that I was looking at where were the fees high, where was it digitized, or the customers were ready to use a digital device. So back 14 years ago, some of the markets in Latin America, while expensive, the adoption curve of using a smartphone to link your debit card and identity to, it wasn't as trusted at the time. So it was fee, it was digitization/trust, it was the size of the market. There's 10% of GDP in the Philippines. So 1 out of every $10 earned in the Philippines comes from remittances.
That's amazing.
As a society. So it's a very large market, all those things, and it was a great first market for us. We focused just on that for the first couple of years.
Love it. And I think building trust is so important to you and to your customers in all these hundreds of countries, and something that we've talked about a bit. You obviously attacked speed and price and just built a superior competitor to the alternatives. But that's not enough when you're moving money around the world. We'd just love to hear your thoughts about that journey. But gosh, we're we're better at all of these things than a lot of our established competitors, but how are we building trust along the way so that people actually want to trust you with their money?
Yeah, so that was the other aha. In the early days, I thought it was about speed, about price. Those things matter, but they matter under the umbrella of trust. And I think with consumer fintech, that is often overlooked. And there's so many poignant stories and moments. I mean, one is as recent as like last week. I was talking to a customer, and because we've gotten to enough scale in the Philippines, going to that example, and because not only are we digitizing so that customer doesn't have to go into a physical cash location, but also on the receive side, there's a mobile wallet called Gcash that a lot of folks receive funds into as opposed to getting cash pickup. That means we're taking so many costs out of the system. But what's interesting is I was talking to this customer, Levy, and Levy said, she was almost skeptical because the price was so good. She was like, how do you actually build, how are you building a sustainable business? How are you doing this? And so it was this, again, reminder, and there's hundreds of stories like that, to where you've got to have a product that is trusted first and foremost, and that means operating within the regulatory framework. It means actually having a reliable service. 90+% of our transactions are delivered in less than an hour. Those kind of things are really hard to deliver. And then once you deliver those things, you can offer a lower cost product, but it goes in that order in terms of how customers think about which remittance service to use.
Yeah, absolutely. And it's a pretty enviable TAM, as it were, right? Do I have this right? 1 billion people around the world, or roughly 1 in 7, are sending or receiving remittances. I mean, that's just such an amazing market and such a huge space for innovation. And curious how you think about this. I mean, you've obviously had to be involved not just internationally, but also state by state here in the US in terms of understanding and shaping the policy environment for this future of remittances. Like, that must have been extremely important to you in this journey. I'd just love to hear how you think about that regulatory environment and how important is a stable policy environment to building a company and an impact like yours?
Yeah, I think that so I came from Barclays Bank before I started the business. That's who I was working for in Kenya. And because I came from banking, and because the area we're in is less like crypto where there might be gray area, we are a money transmitter, like no doubt about it. And so we leaned into that regulatory work in the early days because it's part of building and maintaining trust. So we're regulated in 48 states. Any state that has a money transmission law, we are overseen by the CFPB, by FinCEN, and that's just in the US, let alone as I mentioned, we're in 170 countries now. And I think that operating within that framework is critical to build and maintain trust with customers. And we've seen that from the start. I mean, we were talking a little bit earlier. In the early days, this is before I had family, kids, it was easier to travel a lot. But I went to Springfield, Illinois. I went to all these states to meet with the regulators. And a lot of the regulators at that time were like, companies don't do that as often when they're getting like pre-product market fit. But we always saw it as something that I think is critical to our success.
Yeah, well, it's super important. And it's interesting to see that through line of trust for you, right? I mean, you were building trust with customers almost before you needed it, building trust with regulators before you needed it, and especially state by state.
Yeah.
So important. I want to just ask you one final question on the kind of product founder side of things before we switch gears to Washington and policy a little bit more deeply. Innovation is obviously crucial in terms of growing the business, serving the customer, but it's a precarious balance. You don't want to over-innovate to a point where you jeopardize the deep trust that you've built in so many of these different countries. Like, how do you balance that? How do you drive innovation while still maintaining your, really authentic obsession with maintaining that like trust, safety for your customers? What does that balance look like for you?
Yeah. I think within a company, I think that there's ways to innovate that have no risk of eroding trust with customers. And so internally, I think that is something that we can do in parallel, and they're not mutually exclusive. I do think in a regulatory environment, it's important to have a risk-based approach because, as earlier speakers have said, it's a very different scenario for an early stage startup than it is for an incredibly large money transmitter or bank, and there should be risk-based approaches to that. And so there are improvements we can continue to make in that space, but I think it is more of a regulatory question and taking a risk-based approach that's most important.
Definitely. And I want to talk a little bit about your role in this financial ecosystem because it's a unique one. I mean, in addition to providing this alternative to traditional remittance providers, I mean, there's so many middlemen. I mean, you all are partnering with hundreds, if not thousands of banks to make that happen, as well as with local banks and community banks. Like, how is building that ecosystem and infrastructure around, like how did that come together? Like how big of a focus was that of yours as a founder, building that massive network around Remitly?
Yeah, it is a whole, so we, if you look, last year we sent about $40 billion through our system, and customers can send it between 170 countries, but billions of bank accounts, hundreds of millions of mobile wallets, hundreds of thousands of cash pickup locations. Building out that network, to your point, takes a lot of partnerships. So you've got to have the right, again, kind of foundation from a regulatory and trust standpoint, not only for our customers, but with our banking partners. And then within those banking relationships, it has been critical from day one, because if you don't get that right, you can't get the 90+% of transactions delivered in less than an hour. And we still haven't gotten it perfect. 90% still 90%. But you see how that's getting better every day, and that is because of these relationships and partnerships that we have around the globe that enable us to not only have that range of options for our customers, but also lower cost, and because we're going direct, and also much faster and more reliable. So it's a key part of our business.
Amazing. And that ecosystem is not the only ecosystem you have to think about. You know, using Director Chopra's point, we got to think about the tech as well as the fin. I wanted to talk about digital ID a little bit. I mean, as finance overall becomes more digital, financial inclusion so important. Is there a role, like how do you think about digital ID as balancing that financial inclusion with safety and as you mentioned before, kind of risk reduction?
Yeah, there's a couple policy points that I'd make. One is around digital ID. You think about that trust hurdle, and we collect from our customers' name, address, date of birth, social security number in the US context, or tax ID. And when you look at the systems for that kind of identity verification, it's actually pretty old and antiquated compared to what a lot of other countries do in terms of having a digital ID that is more portable and easier for customers to be able to verify their identity, which not only makes it easier to build trust, but it also brings the cost down. It makes it so it's even more effective to, I think, fulfill the intent of the regulatory obligations around any sort of nefarious activity. It makes it more accurate because you've got a digital ID. So there are privacy and other elements that need to be considered, but I think having a digital ID is one that is good for all aspects of the ecosystem. And the second policy element that I'll mention is if you look at what drives price for customers, ultimately, it is collecting funds, dispersing funds, and it is still fairly expensive and or slow in the US context to be able to collect funds from customers. And so the good news is there are innovations like FedNow that are out there now, which would make it much less expensive. I mean, significantly less expensive, which could be passed along to customers. But unfortunately, the way the regulation's written is that outside of banks, you can't get direct access to FedNow, which is an outlier compared to a lot of other countries where highly regulated, I mentioned who are regulated, but highly regulated non-bank financial institutions have access to payment rails like FedNow. And so if, not just us obviously, but if global payments companies, remittance companies, however you cut it, have access to things like FedNow, it has a huge win in terms of bringing down the cost of remittances for customers. And I think the good news is a lot of folks are getting that now, and I think there's some momentum about that hopefully happening.
That's great. No, it's great to hear. You beat me to the first half of that magic wand question, which I love, and that access to those Fed rails, so important. You have a unique perspective, having worked with so many different countries. I'm going to give you that magic wand back one more time. If there's anything else that you could beg, borrow, or steal from another market that you've worked in and want to bring to the U.S. to improve the operating environment for you and more importantly, for your customers, like, is there anything else that you would want to bring here to the U.S. financial system? Mm-hmm.
I think, honestly, I would plus one what I just
said.
Same
one? Okay. It makes sense. No, it's important. It makes sense.
And it would have a transformative effect on just faster domestic rails and adoption and equal access to those rails is what I'd say. So
I love it.
I'd repeat it.
I know exactly why you've loved fintech from this conversation, so thank you so much. We've got a couple seconds left. What's one thing that you think everyone in this room should know, not just about Remitly, but about fintech as an ecosystem?
Yeah, I would say some of the themes we've talked about, especially in the consumer space, it starts and ends with trust. That's what it's all about. And the second thing I would say is that in some ways, the US has some catching up to do in terms of the regulatory and product development when it comes to supporting fintech. But there are models around the globe that we can look to, like FedNow Access, and looking to Europe, looking to India with UPI, looking at Pix in Brazil. So how do we, in some ways, get faster at replacing legacy rails, which in some ways is harder than what other countries have done, which is leapfrog to a future that we're all headed towards. It's just a matter of how we get there faster. And I think from a regulatory and policy perspective, there's a lot we can learn from the globe in this way.
Perfect. Well, thank you for bringing that global perspective for all of us today, Matt. Appreciate you being here.